This is the Friday, September 19th, 2014 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks, Mike. Glad to be here.
Well, we're going to start this off. We've got a question from Travis in Des Moines. He works in the cotton equipment manufacturing industry, and he's curious, when are prices or cotton acres going to improve? Is this drop in bean prices going to pull more folks back into the cotton?
It very well could, but, you know, like we have talked about before, with corn prices being where they are, a lot of guys might be looking to plant beans just for low risk, and it could be sort of the similar scenario with cotton. As far as cotton prices improving, you know, I think there's a lot of producers out there waiting for 70 or better, and we have had prices improve a bit over the past month and a half or so, sort of recovering from the drop that we had. But from a technical perspective, we could kind of look at that as sort of a midway congestion area and potentially looking at another leg lower. And then when you line that up with the fundamental backdrop, we're looking at the lowest exports that we've seen since 2000 and the highest carryover we've seen since 2008. We are off the prices from last year, but we're well above the prices from 2008. You could argue that prices are going to get into the mid, maybe even lower 50s at some point for cotton. So cotton, I think, is something that producers really need to be a little bit more aggressive on hedging now. And as far as acreage scenario, it'll be interesting to see how the acreage mix plays out over the next few months. You got corn needing really pretty desperately to buy some acres. Right now, beans are buying too many acres, while with the risk-adverse crew or group looking at that as well. So cotton acreage is a big moving target. We'll see more about that in the next few months.
Okay. And now you talked about the acreage battle that's coming on. Todd Calfee in Gravity, Iowa, has a question. Pretty much on everybody's mind is 2015 corn price, acres, etc.
Yes.
What's your opinion?
Again, corn needs to buy acreage. So once we get through this harvest and we get into we get past the whole idea of, hey, what are we going to do? Harvest lows and getting through the glut of corn that we're going to have. Once we get past that and start thinking about next year, we're going to realize that, hey, we do not need another record soybean acreage this year with what's going on in South America. What we need is to at least retain the corn acres that we have. And right now, with what's going on in the north and the terrible basis that they have up in North Dakota, South Dakota, Minnesota, these guys are already going to be losing corn acres. So we need to be finding corn acres somewhere else. And the market's going to have to do a lot to try to get that back. So I'm actually pretty optimistic for corn prices on 15 getting into the first part of the year. Because I think that acreage battle is going to be won more by corn strengthening rather than soybeans coming down dramatically. Beans, I do think, can come down further from where we are right now, but corn's going to have to find some strength here to buy some acres.
Now, at what level, because we are dealing with the risk-averse, looking to reduce input costs going to soybeans, and we also are needing corn, at what price level do you think corn is able to buy enough acres back as things sit today?
So we need to get back near profitability. So really, I'm looking for 4.25. 4.25 Ds 15 corn, I think, gets enough acres bought for what we need going into next year. It's a long road to travel, and especially if we're not quite to lows yet, which we may not be. So, you know, look for that possible uptrend getting into the first part of next year. It also opens up the door for an opportunity for producers that may have not had as much corn priced as they would have liked to coming into this harvest. From a very limited risk standpoint, you could be looking to go in and put on a vertical call spread for 8 to 10 cents in either the May or the December 15, looking for that acreage battle rally, looking to get higher. I'm not recommending that for clients at this very moment because I don't think we're quite to lows yet. But once we have lows in, which I think could come between 30 and 50% harvested, I'm very keen on looking to do something like that. Try to pull 30 to 40 cents out of the market while only risking 8. And it's a rising tide because your cash, whatever you don't have sold on the cash side, should be getting better as well. And if you can add another 20 to 40 cents on top of that, then we're all of a sudden we're talking about some okay prices at that point.
Right, it's real money when you get to that point.
That's right.
Now, Corey in Central Illinois has a question, and it comes back to profitability. How will guys cutting back on inputs to save money affect the trendline yields for 15? He's curious, do we start out below already? It's an interesting question.
It's a wonderful question. And without knowing what's going to happen weather-wise, you could assume that we would see a little bit, specifically for corn, a little bit of a reduction. Now, there are guys out there that are just gung-ho on growing the biggest yields possible every year. So whether we're going to actually get guys to cut certain costs or not is a big question mark.
Okay.
There will certainly be costs cut. I really do believe that rents is the one that everybody needs to be taking a look at. Landowners need to be somewhat aware of the situation that we have. So that's where I think there's the most room to move. But that is an interesting concept, and it very well could be that our potential yield for next year might be a little bit less than what it was this year.
You bet. Now, Nick in Tipton, Iowa, has a question as we look to building corn demand. How do we build more demand for ethanol, particularly E15 and exports?
Absolutely. As far as exports, the issue there is China. China's had a couple good crops in a row. They found a way to cancel or not allow or reject cargoes that we were sending in here this year of a non-approved GMO, which every other country in the world's approved, and there's nothing wrong with it. And it's mainly because they have corn to the point where they're selling state reserves of corn. So are we looking to China to be a major corn importer this year? The USDA is reflecting, and all signs point to not as much. Although I will say this, China is now getting into the grain marketing business. So in the grain marketing business, what we like to do is we like to try to look for that profit margin. And when you see corn prices at or near the low end of the range that you've had in the past few years, the idea there is that at some point that profitability is there. So that might tip the scales, and China may actually be a bigger importer than what we're expecting currently. But right now, we don't see any reason for them to need to be a big importer. So as far as exports are concerned, we're looking for exports, the USDA is looking for exports to be quite a bit below where we were last year as the world was catching up with that pent-up demand from the year before, that 2012 year. But I think we could end up seeing a number very similar to what we saw last year, and that would whack another 150 million bushels off the USDA carry out anyways. As far as, what was the other?
Ethanol.
Ethanol.
Where do you see ethanol demand, E15 in particular?
You know,
growing?
I have a bone to pick with ethanol to some extent. I run E85 in my vehicle. It's a 6.2 liter V8 with a supercharger on it, so I go through a lot of it on a very regular basis. And when I do, in the last couple of months, I've spent a lot of time doing crop tours in Indiana, Illinois, and Iowa, and parts of Minnesota and South Dakota. There are certain states that have very good signs for gas stations that have ethanol. Even on the highway, you'll see that. It's an easy roadmap. Indiana and Illinois, it is really difficult to find an E85 station. They're out there, but they're not signed well, and it's just the ethanol industry needs to do a better job and a more uniform job of letting consumers know the product's out there and that we can get to it. Aside from that, I think some money can be spent into growing public knowledge on the benefits of it as well. I'm personally a huge advocate of it. I love running it in my vehicle. It gives my vehicle more horsepower, which I gotta love that too. So yeah, I hope that improves. I really, really do.
Okay. Now, before we let you go, Phil in Ontario, Canada has a question, and he's talking about the range we're in. How long in months do you think we'll see corn trade sideways in the $3 range?
See, a $3 range, I mean, $1 in corn at these lower levels is a big range. So from 301 to 399, it might take a little while for that. But I do think you're going to see a 4 in front of corn, May and beyond. I think you're going to see a 4 in front of corn, and I think it happens within the next 3 to 4 months, and could actually happen sooner.
All right. Well, Ted, want to take the time thank you for taking the time to be with us here tonight.
My pleasure, Mike.
All right. Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.